Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 23rd, 2025, and we're diving into General Dynamics' first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. General Dynamics has reported some impressive numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. General Dynamics reported a revenue of $12.2 billion for the first quarter of 2025, which is a 13.9% increase from the same quarter last year. John, what are your thoughts on this growth?
It's a strong performance, especially considering the competitive landscape in the aerospace and defense sectors. The revenue growth is driven by significant gains across all segments, particularly in aerospace, which saw a 45.2% increase in revenue.
And what about their profitability?
The company reported a diluted EPS of $3.66, up 27.1% from the previous year. This is a clear indication of improved operational efficiencies and cost management, contributing to a 70 basis point expansion in operating margins.
Segment performance and margin expansion. John, let's delve into the segment performance. Aerospace seems to be a standout. Can you elaborate on its contribution to the overall results?
Absolutely. Aerospace revenue surged to $3.026 billion, with operating earnings up 69.4%. The segment's margin expanded by 210 basis points to 14.3%, reflecting manufacturing efficiencies and higher production levels of new aircraft models. This segment is a key driver of General Dynamics' profitability this quarter.
How did the other segments perform?
Marine systems, combat systems, and technologies also showed positive growth, with revenue increases of 7.7%, 3.5%, and 6.8% respectively. Each segment contributed to the overall operating margin expansion to 10.4%.
Cash flow and capital deployment. Moving on to cash flow and capital deployment, General Dynamics reported a net cash usage of $148 million. What factors contributed to this?
The increase in working capital was a significant factor. Despite this, the company maintained a strong capital deployment strategy, paying $383 million in dividends and repurchasing $600 million worth of shares. They ended the quarter with $9.6 billion in total debt, which is manageable given their cash position and revenue growth.
And what about their dividend policy?
They declared a regular quarterly dividend of $1.50 per share, marking a 5.6% increase over last year. This is the 28th consecutive annual increase, showcasing their commitment to returning value to shareholders.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of $3.47 for this quarter. How did General Dynamics perform against these expectations?
General Dynamics exceeded expectations with an actual EPS of $3.66, beating the forecast by 0.19 cents. This outperformance is attributed to their strong operational execution and margin improvements across segments.
How many analysts were surveyed for this forecast?
The forecast was based on a survey of 9 analysts, indicating a broad consensus on the company's potential, which General Dynamics managed to surpass.
Future outlook and strategic initiatives. Looking ahead, what does the future hold for General Dynamics?
The company has a robust backlog of $88.7 billion and an estimated total contract value of $141.3 billion, which provides a solid foundation for future growth. CEO Phebe Novakovic highlighted steady growth and improvement in their defense portfolio, which bodes well for their strategic initiatives.
Any final thoughts on their strategic direction?
General Dynamics is well positioned to capitalize on its strong order book and operational efficiencies. Their focus on innovation and expanding production capabilities in aerospace will likely continue to drive growth.
Key takeaways. In summary, General Dynamics has delivered a strong first quarter with impressive revenue and earnings growth. Their strategic focus on operational efficiencies and a robust backlog positions them well for future success. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing General Dynamics' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on General Dynamics' performance in the comments below.